Hello everyone, welcome back. Today I want to talk about corporate taxes and how it is a double taxation on the shareholders. Okay, and the reason why this came about is because I read a headline today that said that Amazon made X billion dollars last year, and they didn't pay any taxes. Okay, and let's talk about what a corporation is, and then we'll get into the how it's taxed and why it shouldn't be taxed and so forth. A corporation is set up, as a liability protection, okay, for the shareholders specifically. And let's say, just to simplify this, let's say I'm an ice cream man, okay, and I have a business, I have an ice cream truck, I have some ice cream making machines. And I'm driving down the road and I accidentally hit somebody, I injure them, okay, and they sue me, okay. Now because I'm not a corporation, they sue me personally, right? Because the business is directly in my name, okay. They sue me personally, and they go after my ice cream truck, they go after my ice cream making equipment. They also go after my house, okay, because if there's no corporation set up, there's no separation between the individual and the business. Okay, it's all one. Okay, in that case, I have, as an individual, I have absolutely no incentive to ever get myself involved with a business, because if somebody's injured, or if I create a faulty product, like let's say I'm a shoemaker, and I give you, I sell you a pair of shoes that let's say cost $10. And then you come back to me and you say, well, your shoes caused me to trip and break my legs, and now you owe me thousands of dollars in medical expenses. Okay, so wait a second. I sold you $10 worth of shoes, and now I owe you thousands of dollars. There's basically the risk of business is too much. Okay, so for that reason, anybody going into a business basically sets up a corporation for the purpose of separating the individual from the business. Okay, so in the scenario that I came up with earlier, let's say I'm the ice cream man. I set up a corporation. The corporation that I own, okay, owns the ice cream truck and the ice cream equipment. And same scenario, I accidentally hit somebody and I injure them. Okay, now basically they can go after the corporation. They can go after, let's say, the ice cream truck, the ice cream making machines, and any money that's in the bank account of the ice cream corporation, but they can't come after me personally, okay, because you have that separation, okay. So that's the reason why we set up a corporation, okay. That's what a corporation is. It's a separation, a legal separation between the individual and the business, okay. So let's say I got this ice cream business now. Let's talk about the tax aspect of this. Okay, let's say the ice cream truck, the ice cream corporation, had a profit of $100 for the year. Okay, just to keep things simple. Okay, so a corporate, let's say there's a corporate tax in place of 10%. Okay, so the corporation had a profit of $100, and 10% tax. Corporation sends $10 to the government for that corporate tax. Okay, and now there's $90 left over in the corporation. That's as profit. So now me as the shareholder, right? I go to take that $90 out of the corporation. Well, now what happens is, when I take that money out of the corporation, now me as the individual has to pay a 10% tax again. Okay, so now I gotta send $9 to the government. Okay, so I paid a total of $19. The corporation that I own paid $10, and me, the shareholder, once I take the money out, I pay $9, a total of $19. Okay, so that's what the whole corporate tax idea is. Okay, so it's a double taxation. Now there's ways to avoid this. Very easy ways to avoid this. Okay, for example, all the business expenses that the corporation incurs are deductions. Okay, so for example, the fuel expenses of the ice cream truck are all deductible. The ice cream making materials are deductible. Okay, any employees I have, okay, their wages are also deductible, including my wages. If I take a salary, okay, and I don't have to take a salary, but if I take a salary, that's also deductible. And we're doing a lot of oversimplifications here. Okay, so if you're an accountant, don't start nitpicking this. I'm trying to keep it simple. So now basically, one of the things that I can do, if the corporation had $100 in profit, what I can do is I can say, hey, you know what? Before the end of the year, I'm going to take a salary of $100 out of my corporation. Okay, so now what's going to happen is the corporation had $100 profit because it's now paying me a salary of $100. The two, basically it now has a profit of zero. Okay, because it has an additional expense of $100 that is paid to me as a wage. Okay, so I took this money out before the end of the year. It gets deducted on the corporation's books. Corporation has a zero profit. It pays no taxes. Me, the individual, I have a W-2, just same as you guys, right? You guys get a W-2 at the end of the year. I now get a W-2 from my corporation that says I had $100. So now I pay the 10% tax on that, I pay the 10% personal tax on that income that I made of $100, okay? So now I send the government $10, okay? Again, simplifying things, okay? So now instead of paying the $19 that I paid earlier, okay, by taking the money out before the end of the year, I only pay $10, okay? So $19 versus $10. So obviously, I have an incentive here to get my money out of the corporation before the end of the year, so that the corporation can maximize its expenses, and show a zero profit, okay? Now there's, the bad thing about that is by me taking the money out of the corporation as income in its entirety, yes, the corporation's not paying any taxes, but at the same time, the corporation doesn't have any money to do things. Like, for example, if I wanted to buy, if I wanted to buy another ice cream truck, okay, or even if I just wanted to get some spare tires for the truck, or maybe upgrade my ice cream making machine, there's no money in the corporation because I took all the money out of the corporation so it wouldn't have to pay a tax, okay? So there is, by a corporate tax, okay, among many things, basically bleeds corporations of capital, okay, because basically we want to get that money out of the corporation in the form of wages so that there's no corporate tax, okay? So that's one of the really bad things about corporate tax. All taxes make people do things, okay? People are going to try and avoid taxes any way they can, okay? So now I also want you guys to be aware that there's most small businesses in the United States, most small corporations, probably 90% of them are set up as what we call S corporations, which is a special provision in the tax code, so that they automatically don't pay corporate tax. Okay, and part of the reason why the government did this is because they wanted to, avoid a lot of these games that people will play. Okay, now you got to be of a certain size. The corporation can't be bigger than 35 shareholders. And again, I'm trying to keep this as simple as possible. I'm not trying not to go into too many details. But the point I'm trying to bring out here is that most corporations in the United States, right? Most of them, probably 90%, don't pay a corporate tax. Okay? So when you hear a lot of these socialists, crying that this corporation didn't pay taxes, that corporation didn't pay taxes, they're all cheating. No. The corporation shouldn't be paying a tax in the first place because any corporate tax is a double tax. Okay, because when the shareholders go to take the money out of the corporation, you're going to tax them again. Okay. And the people saying these things are fully aware of them, okay, because they understand the system well enough. What they are really doing is they're playing on the tax ignorance of the people that they're talking to, okay? Because most people, don't understand the tax code. Most people don't realize don't even know what corporations really are. They don't understand who owns the corporations. They think maybe that they're owned by aliens or they're hatched or something, but all corporations are owned by shareholders, which are individuals, okay? And basically, when we take the money out of the corporation, at some point we pay a tax, okay? So taxing the corporation at one level and then taxing the shareholders at another level is a double tax, okay? Anyway, I hope that cleared a few things up for you guys. I'll talk to you guys next time.